Here's your mortgage market update for the week of May 19th, 2025. So the 10-year Treasury yield was pretty volatile last week. However, mortgage rates stayed within a pretty stable range due to improved mortgage and Treasury spreads. If not for those improved spreads, we would likely have seen mortgage rates increase last week. Now, fears that inflation would ramp up were delayed at least a month when both the CPI and PPI reports came in lower than expectations. And what was set to be a quieter week looks like it could be a little bumpier now after Moody's downgraded the U.S. credit rating from its top rating of AAA down a notch to AA1. And Moody's referenced the federal debt and fears that it would grow due to the interest payments on treasuries and rising entitlement spending. And this comes in the wake of a package of tax cuts proposed by the House Republicans that failed to pass through the Budget Committee last week. And then late Sunday night, the Budget Committee passed the so-called Big Beautiful Bill out of committee. So how the market reacts will largely drive mortgage rate movements over the next 2 weeks. Now, the administration has long held that this tax cut package is critical to the entire economic plan, which includes tariffs, succeeding. And if they can get the Big Beautiful Bill signed into law and more tariff agreements signed, those will go a long way to keeping inflation under control and growing the economy with the $10 trillion in pledged investments in U.S. manufacturing. And we need to keep inflation under control to keep rates down.